So hi everyone, this is a beginner video to Japanese candlesticks. So we are going to be looking at the structure of the Japanese candlestick. So a Japanese candlestick is made up of the body, made up of the lower shadow or the lower wick, then the upper shadow or upper wick, and then it is also made up of the range. So we are saying it is made up of this green line you're seeing up here, or it is similar to this red line you're seeing right here, is what we call the upper wick or the upper shadow, and then the lower one is what we call the lower wick or the lower shadow, and then from here this solid bar is what we call the body of that candle. So from the tip of this upper wick to the low of this lower wick is what we call the range, right from here up down here, and it is the same on this side. Okay, so the green candles are normally designated as bullish candles, and then bearish candles are the ones which are red. Okay, so bearish is or bullish is the same as buyers, and then bearish is the same as sellers. So we are looking at the structure of the Japanese candlestick. Okay, so we can see that we have said that candlestick is made up of the upper wick, this line here, and then the lower wick, and then it is made up of this body. Okay, and then it is also made up of the range. The range is the all high from the low to the high of the wicks. Okay, so this white candle is the traditional one or the old ones, and then these ones which are colored are the modern ones. But normally now in charts you see the modern candlesticks. So if you come across these black and white, those are just traditional, but they convey the same information. So the upper wick or the upper shadow, it shows the highest price traded in a given time frame. Okay, so right here we have this upper wick right here. They show the highest price that has been traded at a given time frame. Let me say the H1 or the hourly time frame or the daily time frame or the weekly time frame. So this is where the highest price were reached before it went back to close. Okay, so the lower wick or the lower shadow shows the lowest price traded at a given time frame. And then the body represents the difference between the opening and then the closing prices. Okay, so the body, if the candle opens from here and then it goes high and then comes back to where it opened from, and then it goes to close low, and then maybe it moved a little lower before coming back to where it closed from. Maybe it closed from here. So what it forms as this body here is the price between the open and then the close. Okay, so these highest ones are the prices where the price hit but did not close or open from there. Okay, so what would happen, for example, if a candle opens from here and then it goes down, then it comes back. Okay, then it comes back to form a body. Okay, and then before closing from this price, it would have gone up a little and then come back to close from here. So that is how the candles get formed. Okay, so the body is what represents the open and then the close. For example, it can open from here and then close from here, or the reverse. So the range shows the difference between the highest and lowest prices traded. Okay, so when you look at the range, this is from here, the upper wick to the lower wick right there. It shows the difference between the highest price traded and then the lowest price traded. Okay, so it shows that the price went and then the highest price reached was here, but then the lowest price which was reached was here, and the difference between those two prices is what we call the range. So if the closing price is higher than the open price, the candle formed is a bullish candle or a white or green candle. Okay, so we are saying when the open price, for example, the price opens from here, okay, and then it moves down a little, okay, moves down and then goes high, forms the body, maybe goes high a little to come back and close. So if it opens here and then it closes up, that candle formed is what we call the bullish candle or the buyer's candle. Okay, it opens low but then it closes high. Okay, so that is what we call the bullish candle, or in simple conversion it is what we call the buyer's candle. And if the closing price is lower than the opening price, the candle formed is a bearish candle. It is either black or red according to colors. So we are saying that if the price opens from up here and then it goes to close down, we look at the bodies. If it opens here and then it closes here, then that candle formed is a candle that is called a bearish candle or a seller's candle. So in conversion, it is either red or black, and then the bullish one is either white or green. So at sometimes you will see that a candle comes and forms the wicks, but its open and close prices are equal. So this candle is neither bullish or bearish, so it is neutral. Okay, you can find a candle like that. It almost has a zero or no body. Or sometimes you can find when the candle is like this. Okay, so these ones, they show indecision between the buyers or the sellers, so we cannot grade them. Okay, or sometimes they would look something like this, but they convey some information depending on the trend, and that one we shall be looking at it later in more videos. So we have the structure of the candlestick. Okay, we are still looking at the structure, and we said the candlestick is made up of this upper wick, then the lower wick is made up of the body, then it's also made up of the range. So long bodies indicate strong buying or selling pressure, and the longer the body is, the more intense the buying or selling pressure. This means that either buyers or sellers were stronger and took control. Okay, so for example, if we get a big green candle like this, it shows that the bulls are taking over or the buyers are taking over. And then if we get a big bearish candle, it shows that the sellers are taking over. And then if we get a candle which is like that, is neither bullish or bearish, it shows that there is equal buying or selling pressure in most cases. Okay, so for example, if you go and you see a series of maybe bearish candles and the price is dropping, and then we get a big bullish candle, it means that the bulls have taken over, or the buyers have come into the market and they have taken the initiative to win the current pressure. Okay, so short bodies imply very low buying or selling activity, and that means the bulls mean buyers and then the bears mean the sellers. So we're saying that if you see that a candle is, for example, like this one is indecision, but when you see a candle which has a small body, that one shows that the selling or buying pressure is small, depending on the force in trend. Okay, so for example, you can find candles like this, very small bodies. So those ones imply low pressure in buying or selling, and then the big ones indicate that there is a big or a big buying or selling pressure. Okay. So we are still looking at, now we are going to be looking at the Japanese candlestick patterns. So we are looking at the candlesticks, and then the candlesticks, we said they are made up of the body. Okay, so we have the body, then we have the upper wick, then we have the lower wick, and then we have this range all the way from the upper to the lower wicks. So again, now when you look at these candles, okay, they can be combined to make 2 or 3 candles. They are the ones that make what we call the patterns. Okay, so one candle does not form a pattern as such, but when they become 2 or 3, they form what we call a pattern. Okay, and that is what we are going to be looking at. Okay, so when you look here, for example, we have what we call the bullish pin bar, then we have what we call the bearish pin bar, we have the harami, we have the bearish haramis, we have the bullish engulfings, the bearish engulfing, we have the morning star, the evening star patterns. Okay, and those are all different candlestick patterns. So a candlestick pattern is a combination of 2 or more candles, and it helps traders to anticipate the strength between buyers and sellers, or it can also show indecision. Okay, so we are saying that these candlestick patterns, they help us to show whether the pressure of buying or selling has been shifted from one end to the other, or sometimes they can show indecision, just like we've seen in these candles which have no bodies. So candlestick patterns work best if used with other trading tools like chart patterns, indicators, Fibonacci levels, support and resistance, and all these they shall be covered in more videos to come, and confluence videos. Okay. So on this chart, we want to be looking at these candlesticks, and then we see which ones have strong buying or selling pressure and when do they happen. So for example, when you look right here, okay, right here where the price went high, what happened is that we had this bearish candle here, this red candle, and it shows that the bears are taking over. But after that candle, we have these indecision candles. They show that neither bears or bulls are taking over. Bears equals to sellers, then bulls equals to buyers. Okay, so after getting this big blue candle, this big blue candle is a bullish candle. Okay, and it shows that the bulls have taken over, and then we can see the subsequent price went high. So even here you can see that we got this big bearish candle, which shows that the bears have taken over, and then you can see that the price is dropping. So the same thing happens here. You can see that we have this big blue candle, and then the price is moving high with big blue bars, which shows that the bulls are in total control. Even here, bears were in total control. So indecision is whereby you get these tiny candles, for example, right here. Okay. So for example, right here, this is indecision. This is an indecision candle. Those tiny candles show indecision. But these big blue candles, they show that there is strong buying pressure. But this doesn't mean that the price cannot come back rapidly. It can. So at any time T, the pressure can change unstoppably. So when you look at the chart, now we said you're going to be looking at patterns. So patterns is a combination of two. So for example, patterns happen, but not all combinations of 2 or 3 is a pattern. So for example, you can see here we have what we call the bullish engulfing, and we shall be studying it in more videos. Okay. So here we have these tweezers. Okay. We have this doji. So you study these videos on my channel, they're already there. Okay. So I think that is all for candlestick patterns introduction for beginners. So you can now move into advanced courses. So thank you so much for watching this video. Do not forget to subscribe to the channel for more videos like this and for support. My name is Jordan. May the markets be with you. Thank you for watching. Subscribe to the channel. Bye bye.